Well, folks, it's a Wall Street panic out there. Stock market plummeting today. Dow down nearly 700 points. Actually, I think it was down over 700 points today. And this man looks very concerned here on the front page of CNBC here today, right? As higher rates rattle investors. I can tell you, and we'll talk about the whole higher rates thing, but I can tell you that's not why the market was down huge today, okay? There's another much more significant way and reason that the market is down so big today. And we're going to cover that in this video, as well as a few other things out there. Some stocks reported earnings. We'll cover that as well. But yeah, I can tell you this is a small reason that the market's down today. The much bigger reason is so obvious, but it's just totally missed by a lot of folks out there here today. So first off, I appreciate everybody joining me. As always, thanks for being subscribed here. Thanks for being on the channel, guys. A couple random news events here before we get started in the video. This was yesterday. Jessica Alba and her husband spending some time with the Walmart CEO. Ah, gotta love to see it, man. Gotta love to see it. That is honestly a beautiful, beautiful thing to see there, okay? And other random news here today before we get into this one is, what is up with the weather in Vegas, man? Can we just have some normal weather? Like, seriously? Seriously? You know, they tease us. We get some days in the 60s, and the next thing you know, we get the wind, like tornado winds, and next thing you know, it's like back in the 40s again. Like, oh, I'm just ready for springtime. Shout out to anybody else that's ready for springtime now at this point in time, folks. So, yeah, a lot to get into in this video, by the way. If you're looking to apply to join my private stock group, my private wealth group, that will be in the description area if you are looking to apply to join us in there, okay? So, first off, right off the bat, I got clobbered here today, okay, as I'm sure you guys did as well. It was an ugly day out there, a lot of, you know, just down across the board. Stocks everywhere, 3, 4, 5, 6, 7% moves. Palantir was my worst stock here today. Yes, it was. Only things that I had green, Texas Roadhouse looks like it's going to be green. Meta looks like it's going to be slightly green, which just shows you how strong Meta stock is right now. That's incredible, okay? SH, if you don't know what SH is, it's basically just a short S&P 500. So it's a slight hedge I have in one of my portfolios. That was up today, obviously. And then SDOW, which is a hedge I have on, which is basically a triple leverage ETF against whatever the Dow is for a particular day. So, you know, if the Dow is down 2% in a day, basically SDOW in that particular day will be up 6%. Okay. Now, there is something else I have as a hedge, and if you're wondering what that other hedge is, my other hedge is basically put options on Home Depot for this year, which is HD stock, okay? And those are my only hedges I have on in the market right now. And once again, it's not really to try to make money. It's just like in case things get really ugly, you know, SH should print money, SDOW should print money, and obviously HD put options would print money in that scenario, right? If the market got really ugly, I would then sell out of those, take profits, and go ahead and flip those into long stocks that are, you know, very close to, let's call it bottomish ranges, okay? Now, this is a whole rates thing, okay, that they're talking about, right? The benchmark 10-year Treasury yield climbed to 3.9%, while the 2-year rate advanced to 4.7%. Both rates also reached levels not seen since November, as traders grappled with hotter-than-expected inflation data. Traders are worried that stubborn inflation will lead the Federal Reserve to keep rates higher for longer, which could tip the economy into a recession, right? And that bleeds into the whole, oh, maybe we won't have a soft landing, right? Which is definitely, the soft landing has become more of a reality over the past few months and a belief that's going to happen, right? But if you start talking about inflation stubbornly high, that leads you into, oh, maybe we're not going to have a soft landing, right? And maybe it's going to be a medium landing, a hard landing. That scares people, or a crash landing. That really freaks out Wall Street, right? KKM Financial CEO Jeff thinks that investors should still remain optimistic despite the ongoing market downturn. He said that the uptick in the bond market is attributable to a lag effect from higher Fed rates rather than an indication of a bear market. He added that the 10-year note is a tremendous buying opportunity with yield this high, he says, okay? And so this is what is being blamed for the market in regards to today. And like I said, this is just a small reason. There's a much bigger reason that the market was down huge today, much more significant. It matters so much more than that. We're going to cover that in just a moment here. But if we do talk about inflation, okay, there's two components of this. So this is Trueflation numbers, by the way, which tries to give you the most accurate reading of what inflation is at currently, like literally right now, right? Now, their numbers are going to be different than the government numbers, right? The government numbers never had us up in the 12s. The highest the government numbers ever had us was the 9s. But I honestly trust Trueflation more than the government numbers, okay? So as of right now, they got us at 5.26%. And it's clear as day what the trend is for inflation. It's coming down, and it's coming down pretty rapidly. But recently, we have a little problem, okay? Check this out. This is over the past 1 month, okay? But if you look over the past week and a half to 2 weeks, we're kind of not really moving down anymore. And so this worries people. This is something that people look at, and when you have, a week and a half, 2 weeks go by, and it's like, oh, wait, inflation is not really coming down, it freaks people out, and people start to draw conclusions, right? They start to say, oh my gosh, maybe inflation is not going to come down, maybe we're going to be stuck in the 5s, which is a huge concern, because if you're talking about being stuck in the 5s, that's a long way from 2%, right? Which is where the Fed wants to get to. And this freaks out people. It causes them to panic, obviously. It causes them to worry substantially. It causes them to sell stocks, sell positions, because they're looking and they're like, maybe inflation's going to stay up here, and next thing you know, we're going to have these super high rates for a long time. The Fed's going to have to keep raising, which means stocks lower. That's what freaks people out, okay? So that's obviously a concern right now, okay? But if you want to know why the market's really down huge today, okay, there's something massive that happened here today. This is what it is, okay? So if you didn't see, Home Depot stock down over 7% here today, okay? Over 7%. Now, Home Depot is one of the most important companies in all of the United States of America for kind of a feeling on how the U.S. economy is doing at a particular time. And basically, when Home Depot numbers are great, people see the economy as being in a great place, okay? When Home Depot numbers seem like they're weakening and the business is getting worse, everybody says, uh-oh, the U.S. economy is getting worse. We're getting more and more into recessionary territory. That is the view, okay? And so people look at Home Depot very similar to how they look at UPS and FedEx, that when the numbers are troubling, when the numbers aren't good, people start getting very, very concerned, okay? And if you think about Home Depot, right, Home Depot might be the most direct play on the U.S. economy. It might be, right? If real estate's doing great, if people are doing projects, spending money on their homes, all these sorts of things, Home Depot is going to benefit from that, right? If they're not, Home Depot will falter. But there was a lot of problems here with Home Depot earnings, okay? And so when I see 7% down, and I see something like this, right? Home Depot beats earnings, they boosted their dividend, and the stock's still falling. That makes me say, okay, what's going on here? Let me dig a little deeper. So what do I go to? I go to Home Depot Investor Relations page, and everything begins to get spelled out on what's going on actually here, okay? First off, sales in the fourth quarter, they increased $112 million. That's a 0.3% rise year over year. Now, that's troubling in itself, because think about how much price of everything's gone up. Inflation, inflation numbers have been, what, 5, 6, 7, 8, 9% this year? And so if you can only eke out a 0.3% gain, that means your business is incredibly weak in this environment. But the more troubling thing is comp store sales, okay? Comp store sales decreased 0.3%. compared to a decrease of 0.3%, previously. So this is troubling in the fourth quarter and in the fiscal year, comp store sales down. Okay, this basically shows you there's weakness. Now, we haven't even begun to really see the impact of slower real estate market. Very small amounts so far. You're going to see us a lot more in 2023. So if anything, I think comp store sales are going to get significantly worse from here. And this is just a start, and I can tell you no one wants to hold a stock in which you have comp store sales going down. That is usually the worst thing you can see in a retailer or a restaurant. That's the thing that freaks out people more than anything when it comes to restaurants or retailers. Comp store sales going down, okay? Now, even more troubling is if you look at sales overall, they were up 4.1% for the year. But recently, they're only up 0.3%, which means the business is getting significantly worse, okay? It's getting significantly worse. Now, to take this a step further, this is where things get downright scary, okay? Extremely scary, and this is scary for the entire market, and I'll explain why here in just a moment. But look at this, okay? Home Depot says they're going to invest, and they put it as nice as possible, okay? They're going to invest an additional $1 billion in annualized compensation for their hourly associates, okay? Now, on one side, it's like, oh, that's beautiful, Home Depot. You're giving your employees more money. That's great, okay? Love to see it. But I can tell you, Wall Street doesn't love to see that right now, okay? If this was in the market of several years ago, people would have applauded this, say, great job, Home Depot. Not in the market of 2022 and 2023. 2022 and 2023, Wall Street wants to see you cutting employees. The Wall Street wants to see you cutting earnings of employees. They do not want to see you invest another $1 billion. Not in this environment. No, no, no. 2022 and 2023, you can't get away with that. Almost any other year, you could, okay? But not right now. Not in this environment. So when you're talking about your comp store sales are getting worse and could definitely get much worse from here, okay? And your business is clearly weakening significantly. And then you go ahead and say, we're going to spend an extra $1 billion on our employees, which is a significant amount. Wall Street goes, what? No, 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 not right now. Not right now. Not with the real estate marketing falling apart like it is right now. Are you kidding me? Are you kidding me? I see why the stock was down 7+% here today, right? Check this out. This is their guidance for fiscal 2023. They say sales growth and comparable sales growth, they're going to expect it to be flat, okay? First off, they're not going to be flat. They're going to be down, and probably down significantly. This is a misstep by Home Depot's management team here. They should have known they're already going to get their stock tanked. What they should have said is we expect sales growth. We expect a sales decline of 1% to 5%. That would have covered them. Because then, as this year went on, they could have been okay? Because that's probably what's going to really happen. Sales is going to decline for this company, likely this year, okay? And, you know, now they put themselves in a very hard situation. So now if they have any quarters where sales come in negative, which I think is a realistic possibility, oh boy, you know, you're stuck in a really bad situation here, okay? Operating margin of approximately 14.5%. Which reflects approximately $1 billion in additional compensation for frontline and hourly associates. Oh boy. A tax rate of 24.5%. Diluted earnings per share to decline or mid-single digits, okay? So they expect basically their profitability to go down in 2023. And that's with them expecting basically revenue to be flat. So now imagine a scenario where revenue goes down 3%, 5%. Dare I say 7 or 10% if this real estate market gets far worse, right? Because you got to understand how dependent on real estate market Home Depot is, okay? You got to understand, when somebody goes to sell their home, usually they have to fix it up. They have to paint, they have to fix this, they have to fix that. Anybody that's gone through the process of selling a home, you know exactly what I'm talking about. And guess who benefits more than anybody from that? Home Depot. You hire a handyman to fix this, fix that. Guess where he goes and shops and gets a part here and there? Home Depot, okay? Plus all these homes being built, all the tools that are ordered from Home Depot, all the supplies, it's huge. And we know the backlogs of the home builders are starting to dry up significantly. And so as 2023 ticks along, we're likely going to be in a situation here where home building is going to become less and less. I've been calling this out for months and months and months. I've been calling this out for a long time. And if you watch this channel, I appreciate y'all. You've been hearing me talk about this for a significant amount of time, right? And this is a huge worry, right? And it is something that absolutely will hit the economy. If the Fed keeps rates up here, and if mortgage rates are still going to stay in 6s and 7s range, I can tell you real estate's not coming back anytime soon. It will continue to weaken. Prices will continue to go down. People will not put money in their homes because no one puts money in a home when the price is going down. Look what happened to Home Depot in the great financial crisis when people's homes were basically depreciating, okay? They weren't appreciating, they were depreciating. They were becoming less. No one wants to put money in a home like that. People love to put money in their homes when they see their value and they go on Zillow and they see their estimates and the price goes up and get it, because then they look at it as an investment. But once your home value starts to decline, which is happening across the United States of America right now, home prices are starting to go down. Everybody starts looking and they're like, that's an expense. I'm not making an investment if I go spend money on this, if I go do this, if I go put in new flooring. Now I'm talking about an expense, right? That's a whole different scenario there, okay? That's something no one wants to see in regards to this. So this is extremely troubling. Now, if you want to take this a step further, oh baby, okay? This gets even worse as we dig into the numbers, okay? Customer transactions are already down 6% for Home Depot, okay? Already down 6%. The average ticket is the only thing saving Home Depot right now at a 5.8% increase in average ticket. Oh my gosh, okay? So that just shows you that, this doesn't even include HD supply either in this data here. I mean, this is extremely, extremely troubling. But you want to know what's even more troubling is the valuation of Home Depot, okay? Check out the valuation of Home Depot. And this is a problem with a lot of these Dow stocks that I've been talking about for months now, okay? And this is what I've been talking about. Like, if you're going to see real weakness, you're going to see a lot of these Dow stocks weaken considerably. It's not like Home Depot's a cheap stock. Home Depot's trading at a forward P of 19, 20, 21. It really depends on what you think the profitability. I think, honestly, really, Home Depot's trading at a forward P in the 20s right now. In the 20s. It's expensive, especially for a real estate market that's topped, okay? That's very troubling. A PEG ratio of 3 or close to 3, that's an uh-oh situation. Home Depot stock has to fall considerably from here, in my opinion, right? Which is why this is one of the stocks I bought put options on as a hedge this year. Because I'm looking and I'm like, okay, of hedging opportunities, I think this is a pretty attractive one, just in my personal opinion, okay? Yeah, if the economy gets far worse, Home Depot numbers are going to get extremely worse. All you have to look back at, and it was funny, I heard somebody arguing with me one day, or trying to argue with me. I don't argue with people, but they try to argue with me, trying to push back against this and like, oh no, if this happens, and thinking Home Depot numbers. Dude, you've already had proof of this. Go back to the Great Financial Crisis. Look what happened. Like, people just need to study history sometimes. It would be so valuable if people just study history. Look what happened to Home Depot in the Great Financial Crisis. Look what happened to their revenues. Look what happened to the profitability. Look what happened to the stock price. They were down for years, okay? Look what happened to the valuation. Look what happened to the P ratios that Home Depot ended up, basically having over that time, okay? And, maybe in a year from now or 2 years from now, Home Depot might be an attractive investment opportunity, but I'll tell you, it's not right now. It's anything but an attractive investment opportunity right now, okay? Not in this sort of cycle we're in right now, not in this sort of market, and not when this company's about to spend an extra $1 billion on employees, while their revenue is likely going to start declining, and their profitability is going to tank for this company. So I can tell you, there's a lot of companies in the market that are going to see their margins and profitability increase in 2023. Home Depot is not one of those. And I wouldn't be surprised if this one sees, it really depends on how bad the real estate market gets. If the real estate market continues to weaken from here, Home Depot will report negative earnings, okay, as in, basically net income getting worse and worse for several years. That can definitely play out if you're going to see the real estate market continue to weaken. But this is why it matters so much for the market, okay? It goes so much bigger than this. The fact is, Home Depot is the third biggest weight in the Dow Jones Industrial Average, okay? Remember SDow? Start putting all these pieces together and you get to see why I hedged certain ways, okay? Home Depot is the third biggest weight in the Dow, okay? So if you're talking about weakness continuing in Home Depot, right, you're going to talk about the Dow is going to continue to be hit. Goldman Sachs is a mess right now. They really are a mess. If they continue to get hit, guess where the Dow's going? Down, 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 okay? McDonald's is trading at one of the richest valuations you've seen, okay? Microsoft is great. I won't say anything bad about Microsoft, okay? Caterpillar, they're going to see weakness continue in real estate, but the good thing for Caterpillar is the government's going to spend like crazy on state and federal level here over the next, years, okay? So that's the thing that could save Caterpillar is all the government spending, okay? So nonetheless, folks, we got a lot of problems in the Dow. United Health is trading at some of the richest valuations when it comes to PE ratios, forward Ps, price to sales, anything you want to look at that it's ever traded at in the company's history. That's a risk to the Dow, okay? So the Dow has risk all over the place right now, okay? And this is why it matters for the market so much, okay? Now, Walmart also reported earnings, and I thought there was something very telling that happened in the Walmart earnings, okay? So Walmart, the stock didn't get hit, okay? Certainly wasn't great, but I'll tell you what, on a day when the Dow Jones Industrial Average was down 700 points or whatever today, I can tell you eking out a gain is a win for Walmart, okay? So what happened here with Walmart? Well, look at this, okay? So their revenue came in at $164 billion. That's an increase of 7% year over year. That's a great number for Walmart. Great number. Well done, Walmart, okay? Well, adjusted earnings per share came in at $1.71, both higher than Wall Street estimates. So they beat on revenue, that's a double beat, and they beat on earnings per share. Net sales also increased 7.4% for the quarter as mid and higher income consumers look to the retail giant for value in an inflationary environment. So Walmart's actually attracting even higher income folks right now. With inflation being so high and people being so focused on price right now, we got an extraordinary situation actually happening where folks that even make, have really good incomes, high incomes, are saying, I'm going to go do some shopping at Walmart. That's intriguing, okay? That's a difference. Now, that does worry me a little bit about a dividend stock I own, which is Target, which is why I'm not going to run out to buy Target necessarily if it goes down in the short term, because I am definitely a little concerned that Walmart, if Walmart's getting more of the higher income folks, who do you think they're stealing those customers from? They're likely, unfortunately, stealing those. They could be stealing some of them from grocery stores. They could also be stealing some of those folks away from Target, okay? So that's something I definitely think about in regards to this, right? That they're stealing some of these. And think about this for a moment, okay? This is very telling. Think about some of the brands Walmart's attracted recently and started to bring into their stores, okay? I know we laugh a lot about Tattooed Chef after what's happened with that company over the past year, okay? It's been an unmitigated disaster. But Walmart recently has brought Tattooed Chef into their stores. You only bring a brand like that in if you're trying to attract higher income folks. That's the bottom line. Like, their meals are usually $4 or $5. It's not like they're cheap. They're not a cheap brand, okay? So if you're going to bring a company like that into your stores, it's because you're trying to attract those higher income folks, right? Think about Honest, right? These are screenshots. Guess who just got into Walmart recently? And I showed you guys the photo from yesterday with Jessica Alba with the Walmart CEO hanging out, and her husband and the wife and the whole deal, okay? And guess who just got into Walmart in a significant way just a couple months ago? It is Honest. Honest has some of the most expensive diaper products and whatnot that you're going to find out there. And who's Honest customers? They're more of the higher end middle class folks, or just the higher net worth folks, so folks that have good incomes. So if you're talking about Walmart's bringing in Honest, they're not just bringing them in to bring them in, they're bringing them in to attract a certain type of clientele, a clientele that has more money, okay? That's who they're trying to attract at this point in time. This was from a Walmart in Las Vegas here. And look at, Honest is now in Walmart Las Vegas, baby, okay? Walmart's doing this deliberately to try to steal away Target customers and to try to bring in some of those higher income folks, right? And those higher income folks can spend significant amounts of money at your store, right? And so I think that's very telling in terms of the type of environment we're in, where Walmart's saying we're going to steal higher income folks. That's very telling. Check this out, okay? This is pretty crazy. Now, they talk about, are we in a lost decade or something like that, right? And this is pretty telling. This is a 5-year chart of how the stock market's done over the past 5 years. Now, what's very interesting is when the Dow was at the lows earlier in the year, right? The Dow was only up 13%. So basically meaning, if the Dow was to go back there, which I think is a little bit of a longer shot, but it's definitely a possibility, okay? If it was to happen and it goes back there, that means in the 5 years, we'd only be up 13% on the Dow. That's absolutely horrible. And that does kind of put you into almost this lost decade situation, right? But the thing I'll say about this is what has happened here. Obviously, Rona screwed up the whole stock market, screwed up everything, right? They decided to shut down the worldwide economy. It screwed up everything. The Fed obviously did what the Fed did. States and local governments, your politicians that you guys vote for, they decided to spend like insanity, okay, on both sides of the party. Don't act like it's just one, it's both sides, okay? They spent like crazy. And guess what we got? We got hyperinflation while supply chains were a problem. Because we know if you give Americans a bunch of money, we know what Americans are going to do with that money. They're going to spend it like crazy out there, man. And that's exactly what we saw play out. And now we're having to feel the ramifications of that. Now we got a Fed that's the most aggressive Fed pretty much in the history of the Federal Reserve in terms of how fast they've been raising rates. It's never happened this fast. This is worse than the Paul Volcker era. Okay, if you look at the rate of increase in the Volcker era versus this is way higher. We're in the thousands of percent on terms of how fast they've been increasing rates on a percentage basis. Volcker looked like child's play. They act like this is so funny. People act like Powell is not raising as aggressive as Volcker. It's extremely more aggressive on a percentage basis. When you are used to 0% rates and you raise to Fed funds rate of 5% or whatever, I'm telling you, that's way more extreme than if you go from you got Fed funds at 10%, you go to 20%, okay? It's an extreme difference in that. And so the fact is we get the most aggressive Fed because of what happened there, right? It screwed everything up. It screwed up companies' earnings. Company earnings tanked. Then they skyrocketed. Now they're, some of them have tanked recently. This whole thing, if that didn't happen, we could have been probably on a more normal trajectory, but because of this thing here, it messed up a lot of stuff, right? And now we're having to deal with the ramifications of that, right? Now, I posted this on Instagram a couple hours ago. by the way, if you don't follow me on Instagram, Financial Education Jeremy, follow me on there. And make sure you spell everything right, because there's like a million accounts that try to impersonate me, okay? A lot. It's ridiculous. I get messages every single day from tons of people. And it's embarrassing, because even sometimes like friends or, acquaintances or whatever will come up to me and they'll be like, hey, are you messaging me on Instagram about trying to get into crypto? Like, no. But anyway, so if you follow me on Instagram, spell every Financial Education Jeremy, spell it correctly, okay? But I posted this on there. I said, could be a good week to buy stocks, baby. I said, let's have 3 more days like this, right? And for buyers out there, for as long as this is kind of the perfect scenario, we need like something like this, right? The market's been really hot. It's been roaring, and love to get some good discounts out there. So hoping for this just to kind of be a really down and out week, get a lot of that bearish sentiment back in this market, a lot of the, oh yeah, we're just going to continue to tank, we're going back to new lows, get a lot of the fear going around, getting around inflation. I'm sure these guys are talking about it back there. Get all the fear mongering out there again, get this market down, get these stocks back down again. As a long, that's all we can hope for in this market right now, and get to take advantage of deals. I buy every single week, man. Every single Friday, I buy in the public account, which is available for everybody in the private stock group to see every single move I ever make in that account. The dividend account, which is the same thing, that's available in the private stock group. Everybody gets to see every single move, buy every single Friday in that account. And then the Patreon portfolio, which is in the description area, and I show every single buy and sell I ever make in that account, right? And guess what? I buy every single Friday in that account as well. So I'm a buyer every single week. I'd rather get stocks for cheaper. So I'm hoping that this fear kind of builds up over this week, and we continue to dump these stocks, get S&P back into something with a 3 in front of it. That's okay with me. And for everybody that's a buyer out there, you should, kind of secretly be hoping for that as well. I appreciate everybody joining me. As always, focus, buy the dip, find great companies, find great valuations, and take advantage of those opportunities. Work with urgency in this market in 2023, folks. There's no time to wait around. Work with urgency. It's very, very key this year, folks, okay? Hope everybody enjoyed today's video. If you're looking to apply to join my private stock group, the private wealth group, that will be in the description area, and have a great day.